Regal London Ramadan web series. Today we're featuring Toby Johncox, the head of mortgage sales for Enness Global. Toby, could you just give us give me and our viewers an intro into who Enness Global is?
Sure. Enness Global Mortages is the world's leading high net worth and ultra high net worth mortgage brokerage. We focus on sourcing finance for clients globally, looking to buy, refinance UK and European real estate.
All right, so tell us about the value that Enness provides in terms of its services to its clients who are looking to purchase a home internationally.
Fahd, we predominantly create time for clients. So the international mortgage landscape is quite a complicated one, specifically when you consider high net worth and ultra high net worth clients. So providing time, sourcing the best products for clients, and ultimately helping them to create a sort of 360 solution to their real estate investment by engaging the correct tax advisors, lawyers, property consultants like yourselves, and then ultimately getting them the finest and best value mortgage product.
And where are the majority of your clients looking to invest?
Yeah, I think historically the Middle Eastern clients have always considered London as a second home, and as such, you've seen a huge amount of investment into UK real estate, predominantly London. A few years ago, that probably moved towards periphery cities and regional cities, but I think through the last year, the appetite for London real estate has really come back. And you've seen in yesterday, an article published by a large real estate agent expecting London real estate to increase by 20% in the next 5 years. So I'd see that demand going up.
And do you work with local banks as well as international banks? Because I know a lot of clients in this region as well, they're not 100% aware or fully aware of banks being able to mortgage on UK, offering them products for UK homes.
Yeah, 100%. Certainly, I think the sort of Middle Eastern client have gotten used to taking a mortgage in order to invest in UK real estate. But if you look at Indian clients, the NRIs, and also African clients, it's a sort of new thing. So we spend a lot of time educating clients that they are, eligible for a mortgage. But yeah, we have booking centres, so we work with banks in Singapore and Asia, work with a number of institutions here in Dubai and the rest of the Middle East, but predominantly work with bankers and lenders in the UK and Channel Islands, and along with banks in Europe. So one of the best products at the moment is offered out of a bank in Geneva.
All right. And do you provide this service to all clients, or are there some barriers or factors that prevent clients from having access to this service, for example, nationality?
We helped clients from 79 different nationalities last year in 20 different jurisdictions, based in 20 different jurisdictions. So there is a solution for every shape, type, look of client, apart from for the sort of serious, obvious places you can't organise lending for clients based in. But yeah, we can help everyone. And certainly in the more common Middle Eastern countries, it's very easy to organise, for us to organise finance for clients.
And how has the demand been for mortgages and financing for UK homes from the Middle East over the past 12 months? And has COVID been a predominant factor in this trend, influencing this trend?
Yeah, sure. We've never been busier as a business, and I think if you look at all the publications in the UK in terms of mortgage approvals, those numbers are as high as they've ever been. I think COVID's had sort of two impacts on people from a lending perspective, and of course there's been a number of other third external factors, tax changes, that have made it interesting to borrow. But I think COVID has either tightened up people's liquidity, so those people that may have been in a position to buy in cash at the start of last year are now looking to take financing. And then also just with all the tax changes over the last few years, it now makes a lot of sense for clients to take mortgage or debt against property when they're buying it, which I won't go into because that's for a tax specialist. But the appetite to borrow is significant. Lenders' appetite to lend money is significant. There's some fantastic products out there at the moment, and certainly clients, if they did have the cash to buy property, they could better invest their cash by taking debt on real estate.
All right, so speaking of the products, on average, what is, and this is just an average, I know it's on a case-by-case basis per individual, but what is the average loan-to-value ratio and interest rate that you are providing to our clients from the region here?
As you said, it really depends on the client profile, and ultimately the type of asset they're buying, whether it's be buy-to-let or residential, and also the value of the asset, because of course the larger the asset gets, the more the bank will scale down the loan to value, or the amount you can borrow against the value of the property. On average, we probably transact at between 65 and 70% loan to value.
So that means that clients can take a 65% loan from the bank on the purchase of the property, on the purchase price of the property.
Exactly. So if you were buying for £1 million, you would be able to borrow 650 or 700,000, and then your contribution would be the 35 or 30%. But the maximum loan to value we've sort of seen for international clients available at the moment is 75%.
And this is paid over how many years?
So the loan, again, that really varies subject to the institution you borrow from, but it can be as long as sort of 25 years, up to sort of retirement age of 75.
All right, well, as an example, perhaps you could walk us through the financing process, and we can, to our viewers, who are interested to purchase a home in London, and we can use a case study of our last remaining 3-bedroom apartment in our development Clapham Place, which is priced at just under £1 million at £985,000, looking to complete within the month. Let's say we have a client who's made the purchase, reserved the apartment. Talk us through what the financing process would be if we put them in touch with yourself.
We put a summary together this morning on that exact apartment. I think the lending available is probably up to 75% of that. And the interest rates available potentially, and that's subject to obviously full underwriting and full information on a client. But you could be looking as cheap as 2-year fix at 1.69% per annum.
A 1.6% interest rate?
1.69, yeah, it's fantastic.
That is fantastic.
Or even fixing for 5 years at 1.84%.
All right, but I'm talking more as well in detail about, let's say they do reserve and we put them in touch with yourself. What documents do you require? They're going to ask us, all of our potential clients will be asking us questions of what is required from their side in order to be eligible to proceed on getting a mortgage. Do you need anything specific from them?
Yeah, so as we've always talked, the sooner we can speak to a client, the better, because we can identify early on how successful they would be in getting a mortgage.
When you say sooner, when, in terms of completion, when is the preferential time for them to get in touch with you? 3 months prior to completion?
So preferably we would speak to them at the point of offering on the property, just to have an initial review of their position and advise them that they're in a position to buy that property.
Even if it's a year?
Even if it's 3 years away, yeah. Following that, it would be great to pick up conversation again, probably 6 months prior to completion. So I'm working on some units now that are completing in October, and we're looking to submit the mortgage application for the client towards the end of this month. The process for mortgage is roughly 8 to 12 weeks, but depending on profile, required docs, and where the client lives, that can take longer, and of course it can be done much quicker. So if we have a 3-month time to do the mortgage application, and we're speaking to someone 6 months in advance of completion, that gives us lots of time to put the mortgage in place, which ultimately means the client will get the best product. And then any mortgage offer is valid for 6 months, or typically valid for 6 months. So in that scenario where we're completing in October, if we have the mortgage offer ready in July, then obviously that's valid through until the end of the year, which gives the developer time to complete early or also complete slightly late.
That's brilliant. That's brilliant. All right, and just to, on a final note, final question, if you had the opportunity to buy anywhere in London, where would it be, and why would it be 1 St John's Wood?
I mean, I have fond memories of St John's Wood, that part of London, walking up from Paddington on Tuesday nights for net practice at Lord's Cricket Ground, obviously the home of English cricket, so a great part of London. I mean, yeah, northwest London, easy commutable into town, into the West End, and you've probably got there a nice sort of family community, good outside spaces and all the other beautiful things that London has to offer people taking it as a home.
All right, thank you, Toby. And for all our viewers who want to get in touch or who need further inquiries about the mortgage financing process for our London properties, please do get in touch with myself and Toby. And thank you for your time. Thank you for your time today.
With pleasure. Thank you for having me.